Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. It's another market spotlight today. We're looking at markets across the vast United States that make sense for real estate investors, and today's market has a cool twist. Wait till you hear where and what today on the Real Estate Guys radio program.
Hi, this is Robert Kiyosaki, and I'm very excited about the next Real Estate Guys Summit at Sea cruise. I've worked with Robert and Russell for I don't know how many years, 20-something years. Been friends all this time. We've always worked together. But coming up with something, and it's a concept called an infinite return. And once you understand an infinite return, it means you'll never need money. I'm going to have Tom Wheelwright, my accountant, because you have to have an accountant to do it. But it's probably one of the more sophisticated investment philosophies or strategies. It's something I've used since I've been 27 years old. And once you understand an infinite return, you'll never need money again. You don't have to pay taxes again. And you can never ever say again, I can't afford it. So I look forward to seeing you on the Real Estate Guys Infinite Return Cruise this March. Thank you.
Join Robert Kiyosaki, Tom Wheelwright, G. Edward Griffin, Peter Schiff, and the Real Estate Guys on the 17th Annual Investors Summit Infinite Return Cruise. For details, just send an email to infinitereturn@realestateguysradio.com. That's infinitereturn@realestateguysradio.com. Welcome to the Real Estate Guys radio show. I'm your host, Robert Helms. With me, as usual, it's co-host financial strategist Russell Gray.
Hey, Robert.
You know, last week we talked Jacksonville, Florida, and it was great to be in Jacksonville. And today we're going to talk about a completely different market and a completely different product type. But I think the big picture is that as real estate investors, we start with who we are, our personal investment philosophy, we call it. That's what we want real estate to do for us. Why are we interested in real estate investing? From there, we're going to find a market or markets that make sense given who we are. Then we're going to put a team in place, the people that are going to help us in our quest, because most of us live where we want to live and invest where the numbers make sense, which is why we get around the world so often looking at real estate markets. And then ultimately we find a property. And so today we're taking a look at a really cool market, and we're going to keep up this trend for a few weeks talking about different markets, because that's one of the most important steps, is figuring out what market makes sense for you.
It really is. You know, if you think about hiring people, a lot of companies will have their potential employees take a personality test, a Colby, a DISC, or something, a Briggs-Myers, or whatever it is. And the whole point is to get a good match. It's to have somebody that's going to fit culturally. And so when you're introducing a new property and a market into your portfolio, it's important for you to take some time and think a little bit about the personality, the culture of your portfolio, and what it is you need the property in the market to do. You know, you don't have to be a rocket scientist to know that markets like San Francisco, New York, Seattle behave very differently from markets like Kansas City or St. Louis or Jacksonville. And there's another thing going on out there in the world right now, too. You hear a lot of talk about the real estate bubble, right? Because we've been 10 years from the bottom of the depths of the great financial crisis, and all of the property values, or many of the property values, that had fallen. And now they're back up to where, in many places, where they were before, in some cases even above. And people are running around on mainstream media talking about, oh, the everything bubble, and it's going to burst. And, you know, we argue with this all the time, that real estate isn't really an asset class. And so you can't really look at real estate all across the world, or even all across the nation, or even all across a state as an asset class, because there's different markets, there's different neighborhoods, there's different property niches, property types, price points, ownership considerations, and on and on and on.
And there's never been a single time ever in the history of Earth that all real estate markets have either gone up or gone down. Whether we're talking about price appreciation or rent, they change and they ebb and they flow. And so when you pay attention to a market, you start to get its vibe, its flavor, see where it is in the cycle. You know, oftentimes we'll go to these conferences where you'll get an economist up who will show where various places are on the trend cycle. You know, some places are booming while other places are not. And as real estate investors, we get married to a market. Unless you're flipping houses where you're in and out pretty quickly, you're going to pick a market as a buy and hold real estate investor, whether it's industrial or retail or residential or whatever kind of real estate you want, and you want to do your homework. I can distinctly remember, and you'll remember this story, we had a guy who came in and he famously mismatched a strategy and a market. His strategy was, I'm going to buy a property, wait for it to go up in value, and sell it and make a profit. And the market he picked was a cash flow market where the prices hardly ever went up.
Well, even worse, he used max leverage to maximize the equity growth that wasn't there. And so, if you put down 10% on a property, which is, max leverage on an investment property, at least it was back then, you're in at 90% loan to value. And you're betting on getting on 10-to-1 leverage. So if the thing goes up 5% a year, your equity growth rate's 50%, which is fabulous. The problem is when that doesn't materialize, in order to get your money back out or even get out of the property at all, you're probably going to incur somewhere about 7 or 8% sales expenses, and it just eats up all the equity. So you accomplish the exact opposite of what you're trying to do. So yes, your financial strategy matters a lot, and then it needs to be correctly matched to the personality type, if you will, of the property and the marketplace.
And you mentioned the difference in contrasting between, kind of a top MSA, metropolitan statistical area like New York or San Francisco or one of those markets, and contrasting that with the secondary or tertiary markets. I think there's another nuance there, which is how much legs does the market have? Just because a market cash flows well today, if that's what you're after, doesn't mean it's going to continue to. So we have to look at things like what is the affordability for people to buy? Are they buying? Loans that are available, jobs and the type of jobs. We talked last week about Jacksonville, and even though Florida is a great retirement state, Jacksonville isn't a great retirement market. They don't have a lot of retirees going there. So you can't lump it all in. This is the importance of really understanding the marketplace. And I always say that you can really only understand about a half a dozen marketplaces truly yourself. And that's where your team gets involved. People ask us all the time at events and things about a specific market. In fact, we just had another Ask the Guys question, and these come in all the time. And we're doing an Ask the Guys show in coming weeks, so keep them coming. But a person was asking about a specific house on a street and wondering if a listing 3 streets over would be a better choice. And we looked at each other like, well, we've never been to your town. We don't know.
Yeah, no, we can't possibly know. And this is the thing. You can look at macro trends, and you should. And then you can look at what I call metro trends, and you should. But when it comes down to the micro trends, getting into the neighborhood, there's just too many nuances. And so when you get to the metro level, that's where you go find a team. And your team is the person or group of people who are going to know the nuances. They're going to know the war zone. They're going to know the path of progress. They're going to know where things are trending down. They're going to know where the tenants are lining up and, putting in applications since it's competitive. They're going to know where people are leaving and why. They just have a much better feel for what's going on at the micro level. And at the end of the day, when you're investing, even though you're investing in a macro environment in a metro C, you're investing in a very specific piece of geography. And to really, really know that, you want to be talking to people that live in that market and work in that market on a daily basis. Now, people ask us all the time, how do you keep track of all these markets? How do you keep your thumb on the pulse of what's going on? The easy answer is we stay in communication with lots of people who help us do that. In fact, we're going to talk with one of them today.
In fact, when we come back, you're going to meet a gentleman who was on the show about 1.5 years ago, I think. And since then, a lot has gone on, not only in his market, but the kind of product that he provides investors. Very excited. We'll be talking about Salt Lake City, Utah, today on the Real Estate Guys radio program.
Live nationwide, you're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
If you love real estate and have always wanted to own your own business, listen up. The Real Estate Guys and their panel of experts want to teach you how to go full-time fast in the real estate syndication business. These next few years may go down in history as one of the best times ever to acquire investment real estate. There are deals everywhere if you know where to look and how to assemble the resources. The Secrets of Successful Syndication seminar will show you how to make big money doing big deals from a team of experts that have syndicated projects totaling more than $1 billion. Don't wait for someone to give you a raise or create a job for you. Attend the Secrets of Successful Syndication and learn how to build a team, raise capital, find deals, and make full-time money in 6 months or less. Go to realestateguysradio.com and click on events. All the big players use syndication as a way to diversify risk, optimize profits, and earn big money. You can too. Go to realestateguysradio.com and click on events.
Hi, this is Patrick Donahoe, CEO of Paradigm Life. Wall Street and banks spend billions of dollars per year in advertising with the goal to convince you that they are the solution. But take a look around. None of their advice has worked. If you're listening to this, odds are pretty good that you're already a real estate investor, or at least becoming one. So why do you do it? Is it to hedge inflation, the tax benefits, or maybe it's to get your money away from Wall Street? It's because of these benefits and so many more that I created the Real Estate Investor's Guide to the Perpetual Wealth Strategy. When you combine successful real estate investing with the perpetual wealth strategy, you have the recipe for what has helped the wealthy to establish their financial well-being for decades. You can download the Real Estate Investor's Guide to the Perpetual Wealth Strategy today by clicking the Resources tab on the Real Estate Guys Radio homepage. Don't wait, go download it now.
Hello, this is Robert Kiyosaki. I'm the author of Rich Dad, Poor Dad. And if you're serious about learning how to invest in real estate, listen to the Real Estate Guys. They really know what they're talking about.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show today. Heard every weekend on this great radio station all the time at realestateguysradio.com. Kind of a little series we have going on markets across most of the United States. That may expand before we're done, but what we call a market spotlight. And the gentleman you're about to meet has been on the show before. Let's welcome back to the Real Estate Guys radio program, Mr. Steve Olson. How are you?
Hey, glad to be back. Doing great.
It's good to have you back. I'm so anxious to hear what's happening with the projects we talked about last time. But before we do, you guys are in several markets. But one of the markets that you are certainly strong in is Salt Lake City. And, you know, for folks that aren't familiar, the greater Salt Lake area, which encompasses a lot more cities than that. But tell us what's exciting about this particular part of the world.
Well, Salt Lake City in the Wasatch Front is what it would typically be called. It's a long, skinny metro, right? A little over 2 million people in the metropolitan area. So cities like Salt Lake City, Provo, Orem, Ogden are some of the cities that you might recognize. There's a bunch more, of course, right? It's a lot of people. And one thing that's always been to like about this area is in Salt Lake, we make all our own people, okay? Have been for years. Well, that is to a degree change in that we're not just making our own, they're coming in.
Yeah.
A lot of migration from other states, a lot of companies are moving into Salt Lake, a lot of tech, a lot of logistical things that are happening. We're going to get to that a little bit. So the population is growing. It's been making prices rise because you've got mountains on both sides of the valley. There's only so many places that you can really go here. And it's a very business-friendly area. It's a great place to raise kids, and it's the people are showing up as a result.
Yeah, quality of life is good there. We've spent a lot of time in that market. And then things to do in the winter, oh my gosh, you can ski, snow is fabulous, and that's beautiful in the summer as well.
Oh yeah, I'm going next Friday.
All right, excellent. Well, it's still that time of year.
Yes.
I had a great experience going down the old Olympic bobsled.
Oh, did you?
That was amazing, where the Olympics were, of course, held there. And you could go down and get on a bobsled, and you're not going anywhere near as fast as the professionals, but you're going super fast.
You better not be.
Oh my gosh, no.
I wouldn't be talking to you if you were.
The guy who was our leader was a guy that was a medalist in the Olympics.
Oh,
like, that's what he does now, is he takes crazy people down the mountain. But but from a real estate perspective, you know, one of the things about Salt Lake is it's been stable for a long time. Now, you mentioned the growth you're starting to see, and we're starting to see a diversity of businesses, which is important.
Yeah, that's correct. When you think about the Salt Lake Metro, there's probably two key areas that would draw a lot of attention right now. One of them, I wish we could make it work, but it's just too expensive. Jokingly referred to a few years ago as Silicon Slopes, and now that's officially what it's called. And this is an area that probably starts, it's a little subjective, about a half hour south of downtown Salt Lake City. Cities like Lehigh, American Fork, Draper tend to be the Silicon Slopes area. I live right in the middle of all that.
Okay.
And it's a blessing and a curse, right? There's a lot of growing pains, right? Lots of transportation that's having to be worked out. But companies like Adobe and Ancestry.com and Exactware are just a few that have come in. The NSA has their data center there, so they're recording this too if you lose the backup.
Okay, good to know.
Yeah, I'm sure they've got it covered. So that's the tech area. We've done some projects, fourplex projects west of there, about 20 minutes or so, that you can commute into those areas, and that's where land might be a little bit more affordable, although that's starting to become a problem too. So that's the tech area. And then there's a really interesting area where we have a project that we're working on right now. We've started moving dirt, getting ready to build. Many people call it the Northwest Quadrant.
Okay.
It's where the airport is. It's out by the Great Salt Lake. For many years, you would just consider it the barren wasteland. Why would you go out there? Well, now that's the only direction to go. if you want land in any kind of quantity that's affordable, that's the direction you have to go. And so the state recently passed some legislation designating it an inland port. So they want to get a ton of logistical going in and out of there. And I like to laugh at that because whether it ultimately comes through as an inland port or not, it already is. They're expanding the airport. This isn't exactly a great notch in the belt, but they're going to move the prison out there. Tons of jobs, right? Lots of residents too, okay? But tons of jobs. And Amazon.com has put in a new shipping facility out there. That's 1,500 jobs. So did UPS, 1,900 jobs. Those are just two of all the logistical jobs that are going out there. And what's really interesting about the area, it's commonly called West Valley City, Magna. Those are the two main cities in that direction. We haven't seen a new apartment complex get built except for one for 15 years. And so we did a lot of, I hate to call it espionage, but we did on this new apartment complex. It's been up for about 2.5 years, and they're running at 97% occupancy. People need new, clean places to live. And it's great because you're 10 to 15 minutes into downtown. So you can get where you need to go. You've got the logistical options. You've got the downtown options. It's accessible and it's affordable. When I was a kid, Magna, West Valley City was the butt of all the jokes. Okay. I think anybody that lives there would say, yeah, I'm mad at you, but you're right. Okay. But that's just changing. Right? You're going to look at that area in 5 to 10 years and you won't recognize it.
Well, you know, Steve, speaking of new clean housing, in case folks are listening, and I know a lot will be that didn't hear the interview we did some time back, what you guys do is you build brand new fourplex units, which is awesome because there's all the reasons why a 4-unit building makes sense from a finance side, but also you don't see owner occupants. And there's a whole new trend. You know, Russell and I were at the IMN Single Family Conference a few months back, and big emphasis on the whole build to rent thing because the stock across the U.S. is not as much as we need and as new as we need for tenants. But the vast majority of those folks are talking about single family homes. But fourplexes, that is an awesome niche. And last time you guys were just getting ready to work on some projects. So let's talk about kind of state of the art there.
Yeah, well, we have our reasons for doing it this way. You know, nobody ever won the game of Monopoly by getting a bunch of greenhouses. Right. Okay. Eventually, you're going to want to get into something that's a little bit more scalable if you decide this is a really big long-term income stream for you. And fourplexes are a hyper-specific niche, specifically taking advantage of the fact that an investor can get 10 conventional loans, right? We call them Fannie Mae loans, conventional, whatever you want to refer to them as. Yeah. It's that 30-year fixed rate money. It's typically the lowest percentage you can borrow at. And as long as you make your payment every month for 30 years, you own the property. You don't have to worry about any balloons or any of that stuff that's in the commercial world. Not that that's not good stuff. It's just that changes your business model significantly based on the financing.
Sure does.
Right. So we originally started the fourplex model because it was a great hedge against downturns. It's happened to do really well in an upturn as well. That's great. But it's there for that security. People need affordable, clean housing. And it allows an investor to really maximize those 10 Fannie Mae loans at low fixed rate debt. That's the whole point here. So we get a lot of investors coming specifically for that. And many of them, too, that are real estate professionals on their tax return do cost segregation studies on these. And they can really punch their taxes in the mouth on a cost segregation study for a brand new fourplex.
Oh my gosh, yes. And specifically, you find a market like the one you're talking about, a sub-market where there hasn't been a lot of new apartments, but when they do go up, they get full. Well, that seems like it might be the perfect kind of market to consider this product type.
Oh, I think so. I've been watching this, and I've really appreciated Russ's comments. You know, there's a lot of talk about, oh, bubble. I don't see it. I see an affordability problem.
Yeah.
Right. Builders have been putting up luxury homes, Class A apartment buildings where the margins are nice and thick. That's what they've been focused on. But the bulk of the population is headed the opposite direction. They can afford less and less. So we need more of that kind of housing as a macro trend. And of course, we're trying to zero in on that on a metro basis as well. There are parts of these metros that we operate in where this model wouldn't work. We couldn't make it happen. We couldn't deliver a good cap rate to an investor. So you have to, it's a balancing act.
Well, and these are not like, if you're thinking about a fourplex or a quad being, older, smaller, dingier, that's not what you guys build. These are beautiful buildings. They're apartment grade. Talk about how you selected the right type of unit configuration and size for the market that your owners are after.
Well, we have a video on our website where we took some shots of a fourplex neighborhood that is your classic fourplex neighborhood. It's just run down.
Yep.
Nobody's minding the store. And that's what can happen to these things. If you build a community that's mostly tenants and nobody is enforcing any kind of CC&Rs, then you're not going to like what that thing looks like in 5 to 10 years.
Yeah, over time especially.
Yeah, exactly. So we control that side of it. You can't park your car wherever you want, right? You can't. I saw somebody hang up Pittsburgh Steelers sheets in the window and the HOA was on them. That's not going to fly. In addition, to enhance the tenant experience, right, to make them want to live in and stay in these things, we've gone from that traditional boxy fourplex with 2 units up and 2 units down to a townhome style, right? So why can't you build 4 townhomes? Make it 1 tax ID, and that's your fourplex.
Yep.
And in your tenant's eyes, they get a much better living experience. They get a townhome. They're getting 1,650 square feet, an attached garage, a driveway. Typically, in both the projects we're working on right now, there's a pool, a clubhouse, walking trails, dog park. We've gone to a smart home concept as well. You're seeing everything move that direction, right? You get a doorbell cam, you get the Nest thermostat, these things that enhance that tenant experience. So that's what we do that makes it, better than your average fourplex experience, because we're trying to minimize that vacancy rate over time as much as we can.
Well, investors need to figure out the market that makes sense, and then within it, the sub-market, and then the target demographic. And you've kind of wrapped that all into one. So I know this market is a strong market, and we're here to talk about our market spotlight, but there actually are several markets that you guys are in, and they have to fit that kind of formula where there's good demand, people want to live in newer, nicer units, they'll pay the price necessary to make it cash flow. So let's talk about some of the other markets that you guys are in now and where you're headed.
Sure, yeah. We can grow this company, and we're in the process of doing it. We realized once we had a couple of projects under our belt in Utah, got up to 500-600 doors, and we realized, hey, this could work other places too. This isn't the only good market.
Yep.
Right? So granted, we have to look at 2 things. Number one, can we actually build there somewhere else, right? Do we have the people on the ground? Can we be operational and provide a good product? But also, it has to be a good area. It has to be a good metro. So the first market we actually ended up going into had both those things. It was Houston, Texas.
Yep.
And we're up on the north side of the Houston metro. The projects that we've done to date tend to follow what's called the Grand Parkway. Houston is, they call it a hub and spoke city, right? Freeways go in circles and they just keep adding them so that you can have more access out to the suburbs. The Grand Parkway is a new toll road that's gone in. It connects Interstate 45. Interstate 45 cuts Houston in half, north to south, right? Up there at the Woodlands and Spring, the 2 big cities on the north end of the metro, and it comes all the way down to the 10 where Katy is.
Yep.
It connects to the energy corridor. So before, if you wanted to get from the north side down to Katy in the energy corridor, you had to go down through all the guts of the traffic. And now this is a much quicker transition. It's spurred a ton of development. And the project that we have right now is in Cypress, Texas, northwest end of the metro, right off of 290. 290 cuts in diagonally into downtown. They're just finishing widening 290. We've got a bunch of economic studies and research showing what that's going to continue to do. So with that Grand Parkway, the widening of 290, more and more growth is flowing up into the northwest part of Houston. So we've got a great project up there. In fact, I've got one of the fourplexes in there reserved for myself. We eat our own cooking here. And it's a project I think is really exciting.
Well, and it's a different market than the Utah market for sure, but same thing, very diverse. Even though you think of energy, and that's a big oil and all that is big in Houston and really all of Texas, but there's a lot more there. It's a big top 10 MSA. And again, if you're going to go buy used housing stock, there's a lot of it in Houston, but buying something brand new that makes sense, that you can have in your portfolio for a long time and only counts as a single loan, that sounds pretty good.
That's typically why people come to us there. Yeah, and I agree with you about the economy. There's that oil stigma that hangs over it. But if you look at the top 5 biggest employers in Harris County, only one of them's an oil company.
Right. We're talking with Steve Olson from Fourplex Investment Group. Today about the fourplexes that they build for investors. We'll get into the nuts and bolts of that and taking a look at the markets they're in, because markets drive real estate choices. When we come back, it'll be time to play real estate trivia and your chance to win a prize on the Real Estate Guys radio program. I'm your host, Robert Helms.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
Hey, it's Robert Helms. Thanks so much for listening to the show today. I want to personally invite you to come see an amazing real estate market that combines excellent cash flow, offshore diversification, and what we affectionately call lifestyle investing. Come join me from May 17th to 20th in the beautiful country of Belize. The Real Estate Guys have been bringing investors to Belize for more than 13 years now, and our discovery trip is designed to show you the market like nobody else can. Sure, Belize is breathtakingly beautiful. The people are wonderful, and wait till you taste the food. But the real opportunity is the real estate investment potential. 2018 was the biggest year in tourism Belize has ever witnessed, and this year is starting off strong as well. How does that translate to real estate investment? That's what you have to come see. There's all types of opportunity in Belize when it comes to real estate, including both long and short-term rentals, commercial and retail triple net properties, business opportunities, land acquisition, development, agriculture, and more. And as the only country in Latin America with English as its official language, it's easy to understand the law. Property rights are strong, and contracts are in English. And in Ambergris Caye, a unique situation exists where demand for rentals continues to outstrip supply, creating a compelling environment for investors. So come see for yourself. Join me May 17th to 20th in Ambergris Caye, Belize, as we study the market, learn about the sustainable drivers, and tour lots of beautiful real estate. And like all of our field trips, there are no properties for sale during the weekend. Rather, you'll meet lots of local providers that will help educate you about the market so that you can follow up with them after the trip if the market's interesting to you. But that ball is in your court. You'll receive their contact details, but they won't receive yours unless you give it to them. You've heard about Belize or the Real Estate Guys radio program for all these years. Now come see what the excitement is all about. Plus, we'll have lots of time over meals and activities to talk about all things real estate. To get the details, go to the website at realestateguysradio.com and click on Events, where you'll find the Belize Discovery Trips. Once you register, you'll get information about our group hotel rates as well as travel details. So join me in Belize, May 17th to 20th. It's a beautiful country with lots of amazing possibilities, and the only thing missing is you. Go to realestateguysradio.com under Events. I look forward to seeing you in beautiful Belize.
Hey, I'm Jim Grant. I'm the editor and indeed the founder of Grant's Interest Rate Observer, and you, ladies and gentlemen, you lucky people, are listening to the Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. You know, if you hurry, you just might be able to snag one of the last available cabins on the 17th Annual Investors Summit at Sea. It's right around the corner. Go to the website at realestateguysradio.com and click on the button that says Summit at Sea. We're talking today about a market, Salt Lake City and the surrounding area, kind of morphing into Houston, Texas, as it's our market spotlight. We've got Steve Olson on the program, and what they do is build brand new properties, and they're fourplexes. Love me some fourplexes. Before we get back to our interview with Steve, it's time to play real estate trivia. That's your chance to win a prize by knowing today's real estate trivia question. In just a minute, I'll give you the question. Your mission is to go get the answer, whether you know it or just want to make a guess. Send your best guess to trivia at realestateguysradio.com. Trivia at realestateguysradio.com. The first person with the right answer is going to win a brand new book called Resilience, Turning a Setback into a Comeback. It's an awesome book, a collection of great inspirational stories from a lot of cool folks. That can be yours if you know today's real estate trivia question. Last week on the show, when we were in Jacksonville, Florida, we asked this. Jacksonville was known by a different name until 1822. What name was it known by? Well, it was actually called Cowford, because cattle were transported across St. John's River right through the town. Cowford, now Jacksonville. Here's our real estate trivia question for this week. Well, Salt Lake City couldn't possibly have a different name, could it? Well, actually, it did up until 1868. Salt Lake City, Utah was called something else. What do you think it was? Or maybe you know. Either way, get your best guess to trivia at realestateguysradio.com. Include your name, the answer to the question, and your physical mailing address so we can send you this book, Resilience. You're going to dig it. That's today's real estate trivia question. We're talking with Steve Olson from FIG, Fourplex Investment Group. And I remember last time we were on the show, Steve, I was really enamored by the way that these properties look, beautiful architecture. I mean, they're tenant-occupied buildings, but they're new and they're nice. They have garages and so forth. So before we talk additional markets, because there's one more market we're going to focus the spotlight on before we're done, let's talk about the properties and the size and the area of the rent you go after, the type of tenants that are attracted to these properties, and kind of why you picked that.
Yeah, sure. Typically what you're going to see, we've got a couple of different floor plans that we do. They're all townhouses, like I said, and they're attached. We've got one that's a 3-story unit, right? You get a living room area on the bottom with the access to the garage, kitchen actually on the second floor, right? With a master bedroom, then 2 bedrooms up top. And that's a big unit. It's anywhere from 1,650 to 1,750 feet.
Yep.
So people that like that square footage don't mind the up and down of 3 stories. So younger tenants typically prefer those kinds of properties. Yep. We've got some that are a 2-story as well that come with a 2-car garage. But you're going to be about 1,450 square feet. So you give up some footage, but you get that garage space.
Yep.
So there's a tenant that kind of likes that. And we try to mix it up a little bit in these projects to have some diversity to what the product type is. Most of the time, we're looking at young professionals, young families. It's very rare that we would get older tenants in these properties. We have one project that's near a couple of colleges in Utah where we get a lot of roommates.
Okay.
Right? They need so much housing there, and so they're just piling in. Our HOA hates the parking enforcement there, but it's a good problem, I guess. It means tenants live in your properties.
Yep.
So that's the typical product type, and really the rent is based on the state. In Utah, you're going to see rents of $1,250 a door on the low side, as high as $1,500 a door. And what you're going to see too is a concept we've borrowed from the apartment community is you get add-ons. Right? If you go lease an apartment, they're going to advertise a base rate, but they're going to say, you've got $20 for parking. You've got a $75 amenity fee, right? You've got this, that, and the other. It's kind of like, unfortunately, when you fly on an airplane these days, the ticket price isn't the end of the story.
Right.
And the apartment business, and ourselves included, have gone that direction too.
Yep.
But it maximizes the returns for the investor. So you'll typically see us tack anywhere from $75 to $125 on top of that base rent that I've just told you about.
Well, and you get away with that in properties that are this size and aimed at this demographic, and it gives the tenants choices. So the fact that it also squeaks out a better return for the investor, it's a win-win.
Right, that's correct. And so the tenant is the person that's going to lease this is somebody who says, I don't want to pay a bunch of money. I don't want to pay $2,000 a month for a Class A apartment, but I don't want a house. I don't want to mow the lawn. I don't want to worry about my water bill, right? So there's some extra savings they get because in that, they're not paying water, sewer, and garbage.
Right.
That's wrapped into our HOA fee. So that's where it lands in Utah. In Texas, it's more expensive, right? That high Texas property tax keeps people out of the buying market, creates more renters, thus higher rent. So it's kind of a wash on the cap rate, but you'll see rents of $1,650 to $1,800 in Texas, depending on the market and depending on how many amenities we have in the project.
Now, you guys are focused on building this product for investors. It makes obvious sense. But what about the property management side of the business? What does that look like in these different markets?
That's integrated, right? So FIG, and I think we may have talked about this on the last episode, but I'll go over it real quick. FIG is a brand. And there are the FIG companies underneath the brand, and one of those is the property management division.
Yep.
That's obviously a different company in every state because of licensing requirements. But they typically charge 7% of the gross rents collected. It's less in Texas. It's 5% because lease-up fees are a little more common in Texas than they are in Utah. So they try to offset some of that expense. But the nice thing about the property management is they just take this thing over when the builder turns it. They'll do the final walkthrough for an investor that's off-site. They're going through there. They're looking for things that the tenants are going to complain about or that they're going to break, right? And they'll do that final punch list walk with the builder. And they handle all those warranty claims for the first year so the investor doesn't hear about it, right? If you got maybe some floor that's peeling up or a typical warranty claim, they just deal with it.
Yeah.
Because they're sitting in there in the office with our builder. with us. It's easy to integrate, make it a relatively seamless process, which on a new build isn't always the case.
Right.
I mean, it's investors and myself included, you assume a new build, it's no hassle. But you're taking some raw dirt and turning it into an investment property with people living in it. There's going to be some front-end hassle.
Of course.
Right? There's no ifs, ands, or buts about it. So we've got it to where we've pretty well limited most of that. You're going to have to do a few things. We'll walk you through it. We'll be there with you for it.
And how long is the average tenant there, and what kind of lease terms do you guys typically go with?
We're going to go for a minimum of a year, unless sometimes we get unlucky and we're trying to turn over units in the best time of year, but sometimes they just turn over in December.
Yeah.
Okay. I tell you, every time it seems like the harder we try, the more that actually happens. So in that case, we would sign either a 6 or an 18-month lease.
Okay.
We want to get them off of that bad cycle so that when this thing turns over, it's at a good time of year.
Yeah.
So that's typically the cycle that we would go for, at least a year, but there's your exception that I just pointed out.
All right. So the Salt Lake City area, like what's going on there. Houston, people probably already know a lot about the market, easy to follow up on. What other markets are you guys taking a look at?
Well, we have our third market that we've expanded into. It's a great market. You don't hear a ton about it because it's not a big, giant metro. But if you dig into the stats, you'll feel very confident. And that's the Boise, Idaho metropolitan area.
Okay, yeah.
Right? People that are getting tired of Portland and Seattle are going to Boise. Right? More business friendly, but you're still in the Pacific Northwest. I mean, this might sound lazy, but Google it,
Yeah.
right? Google Boise and Meridian, Idaho, and see what's happening there.
Yeah.
See the population growth, the job diversity. And it has these things in common with our other markets that we like. They're landlord friendly, they're economically diverse, and the population is growing. So they need affordable housing for these people that are coming in.
Yeah, that was actually kind of my next question is these are various markets, but they do have some things in common. And of course, you guys have to be able to build there. You mentioned that.
That's the hardest part.
Right, which
Right.
means you need trades, you need materials, all that. And it's got to make sense on a lot of levels.
Yeah.
And that's actually what I think is one of the highlights of what you do. You guys have to go in and perform that market due diligence on a lot of levels. Not just, okay, there's people moving into the market and net migration is positive. There have to be people at this price range because you can't build a brand new fourplex. The variance in cost from city to city isn't that much. So you've got to be able to have tenants that can pay, 4 figures a month. And it sounds like you can find those markets. And then you've got to find the right property management mix of tenant landlord law and making sure you can bring on a team
Right.
there. And then you've got to find the trades to get it built.
That's correct. Right now, the trades situation in Houston is a lot easier to deal with than it is in Salt Lake City and Boise, right? It's just a lot more trades are available.
Yep.
And so there's even a different kind of lumber you're going to use in Houston versus Salt Lake City and Boise. There's a lot of different moving parts that you have to deal with. We have a certain vertical budget to build these things with, and it'll vary based on those things and the bids that we can get. But typically, because we're going to do this in quantity, and these investors that come in usually do this on a pre-construction basis. We get them set up with a construction loan, and they take on that risk of the build, but it translates into a better cap rate. That's why people like to come to us. I would equate it to this value add strategy that's really caught on. I've been aware of it for quite some time, but everybody's talking about it now. Go find a rundown apartment complex, do a value add, right? You kick the tenants out, you go rehab those units, force that appreciation, bring up the rents, and now you've got a great property. This is just a different version of that. The value add is you took a piece of raw dirt and now there's a fourplex there.
Well, and it's not just a fourplex because you build these in neighborhoods so
Right.
that you can have some of the economies of scale. You can have amenities that tenants want, but also it creates community. What size is your typical job? Or what
A
type-
typical
project?
job site or a project. Yeah. I had one lady say, hey, when you talk about these as projects, I just envision like inner city Baltimore or something.
The project.
So I just want to clarify that to the listeners. We're not talking about the projects here. We're our project. But you would see on the low end 100 doors, as many as maybe 300 doors is typically where we land.
Yeah.
So they can be good sized developments.
Now, last time I had you on the show, one of the challenges you had is that you didn't have a lot of inventory coming up because you were expanding and you had a lot of buyers waiting in line and the wait cycle was a while, which isn't a bad thing. Most investors don't need you to build the house this weekend, right? When it comes available, it'll be great. But
Right.
talk about that. How far in advance do people need to, consider this before they'd actually have a unit rented?
So when we last spoke, that was the challenge, is we didn't have a lot coming up. We were working on some things. I mean, these projects, they take a long time to work out.
Oh, yeah.
From when the eyeballs first look at that raw dirt to all the way when there are units for rent, this is a long time. And there are a lot of things that can go wrong along the way. And when we last talked, we happened to have a couple that got really close and then died at the city level for various reasons, right? That pipeline has been unclogged now, and we've got these two projects that I mentioned that start construction, one of them in April and one of them this summer. So yeah, there's stuff that will start going vertical relatively soon, and you're looking at them turning around in mid-2020 to be available for tenants. So we've forecasted those rents. We look at the comps. We have to do lots of studies on water bills and sewer and HOA costs and insurance costs and put together these pro formas. So, investors are welcome to contact us to see those, to see what we've projected out. And we're generally pretty good at doing that. The times that we've been wrong, we've also been wrong on rents too, in that we've been too low. So that covers tracks. But anytime you're trying to project out insurance, 18 months, right, or city water bills, 18 months,
even building costs. Wow,
it's tough. And now the nice thing is the investors do have a fixed bid contract with the builder. If lumber goes up 20% during this build, it's the builder's problem. So he's trying to price in that uncertainty, and that's what I talk about with the risk of the investor they're taking that construction loan on. But we try to help educate them, and I encourage them to look at the market and go, okay, if I like this market today, will I like it again in 18 months?
Well, I think there's another angle too when they're getting the construction loan. So how this works is you would typically be in contract before it breaks ground.
Correct.
So that way you're financing through the construction as an investor. But that buys you some things. First of all, if the developer has to go do that, it typically costs more. And there's no secret about where all the money comes from. It's like people say, well, does the buyer or the seller pay this cost or that cost? I'm like, at the end of the day, all of the money comes from the buyer. Right. So if there's higher cost of construction, the product's going to get delivered at a higher rate, which is going to affect the cash flows. But the other part is it gives you guys certainty, and it gives the investors certainty because they're in from the very beginning. So talk about the mindset of why you do it the way you do it.
Well, if you were to go hire a real estate agent to find you a fourplex for sale, pick a metro. They're going to come back with some listings, and you're going to be pretty underwhelmed.
Yeah.
Okay. To get a good cap rate and a good rate of return, you have to do typically a heavy value add. And if you're the kind of investor that doesn't want to or have time for that, but you want to get capital into real estate, you like fourplexes, this is a good option for you. Your mentality is that, like I said, you're forcing that appreciation by taking raw dirt all the way to completion. I can give you some numbers. We'll take Utah as an example. We are selling resale fourplexes. So an investor went all the way through the process, and maybe they want to sell. They're going to recognize some of that equity. They're going to 1031 exchange, or life happened and they just want to sell.
Yep.
They've typically been getting about $150,000 to $200,000 spread on what that thing is worth. And it's not just because of a rising market. It's because of forced appreciation. That's legitimate value that the builder passes on when we can come to him and say, hey, here's this project. It's ready to go. It's ready to start construction. All the buyers are in place with financing. He can say, well, I'll sell this at a better price. I don't have to hope and pray that people are on the other end of this thing.
Right. Good stuff. All right. Well, this has been awesome. Great to catch up. Glad to hear it's going so well. And we've had lots of our listeners that have been interested in this, and I'm thinking more so after today. You guys put together a pretty cool report that's going to talk about the things you do and some pretty pictures and stuff. Tell us what's in the report.
Yeah, we've got market reports coming out on Magna, Utah, and Cypress, Texas that'll give you some insight as to what's happening in the economy there, why we like it. Ultimately, if you're going to get in the rental property game, people have to want to rent your properties. There has to be enough people. And those reports are designed to show what's happening there. And it's all stuff that you can independently verify. See for yourselves. Look it up. I'm not here to.
And you should, right?
Yeah. That's right. Please.
But you guys have made it a shortcut at least. So when we come back, we'll tell you how you can get your hands on those reports. Steve, it's been awesome to catch up, and congratulations on your success. I know there's more of it coming.
Great to see you again. Thanks for having me.
There's Steve Olson. More when we come back. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
Forbes rated Memphis the best cash flow market in the nation. And our good friend Terry Kerr at Mid-South Home Buyers has been the premier turnkey rental property provider in Memphis for over 13 years. With an A-plus rating from the Better Business Bureau, Terry has renovated over 750 houses. Real Estate Guys listeners have snapped up hundreds. Discover what these satisfied investors already know. Mid-South's properties are completely renovated with a 1-year warranty and a lifelong rental guarantee. They're affordable, well-managed, and easy to own. Perfect for beginning investors and veterans alike. Get in on the action. Contact Terry and his team via email at midsouth@realestateguysradio.com.
If you want to learn how you could potentially increase your net worth by over $1 million and quit your job in just a few short years, listen closely for the next 60 seconds. This is Brad Sumrock, and over the past 16 years, I've helped thousands of people invest profitably in real estate. But not just any type of real estate. I specialize in helping people syndicate large apartment buildings so that they can be business owners and investors. In today's competitive environment, it's even more important than ever to leverage an experienced mentor, invest in your education, and have a team of advisors that has established relationships nationwide. And so many people right now seem to be struggling to find deals and then get them funded, but yet Sumrock students are thriving in today's marketplace. We've purchased nearly 7,000 units and nearly $1.5 billion in purchase volume over the past 12 months. And with the new Trump tax laws, apartment investors are positioned now better than ever before to pay even less in taxes. To find out more, send an email to apartmentsnow@realestateguysradio.com and you'll get my recent presentation called Why Apartments Now. That's apartmentsnow@realestateguysradio.com.
Hey, this is Phil Collin from Def Leppard and Delta Deep. You're listening to the Real Estate Guys.
And welcome back to the Real Estate Guys radio program, now in our 22nd year of broadcast. Oh my gosh, that's crazy.
Old enough to get a beer.
I know, practically. I mean, it's been a year now we could get a beer. And I think we should. But first, oh my gosh, great to hear from Steve Olson.
Yeah, it is. These guys are great guys. I had a chance to go to their summit and actually invited me to speak. I wasn't able to stay the whole time, but that wasn't because I didn't want to. I ended up having this other opportunity.
I remember.
So we had a VIP friend of ours call up and want to do a quick little video shoot. You had to truck off to Belize, so I had to pull co-host duty and go do that, which was awesome. And as soon as I got done doing that, I headed up to their event. But they had, 300-400 people, I think it was, just a good-sized group of people. And it reminded me of the old days when you and I, Robert, used to have the mentoring club there in Silicon Valley. Just a lot of really smart people getting started in their investment career. They had building their portfolios, and the guys are there, the two Steves are there kind of shepherding them through, teaching them, what they're doing. But the thing that I like about these guys is they walk the talk, and they are creating opportunities for people based on what the market gives them and what people can do. I think the natural progression for someone is to, think about real estate as a single family, because that's what they grow up in. That's what they understand. It's an easy business model. And then the next thing you do is you move up from that greenhouse to the red hotel. And the first step is usually a small multifamily. And that's just a great little sweet spot because there's a lot of competition in those bigger properties. And of course, mom and pops that are buying single family homes will bid the thing up to where it doesn't make any sense because that's where they want to live for the school district or they're raising the kids or whatever. But when you get that little area in between, there can be a lot of opportunity. One of the big challenges is you go into most areas, and to get that kind of inventory, you got to buy product that's probably 20, 30, 40 years old. And rehabs are great, but if you've ever watched any of those home and garden TV shows, now I understand a lot of that is reality TV, which means it's not realistic at all. But one of the things that is true is that, when you go in there to do a rehab and you open up a property, you never quite know what you're going to find. It's like Forrest Gump, rehabbing is like a box of chocolates. You never know what you're going to get.
Well, I think one of the big advantages to this, what they do, building fourplexes on a single parcel number, is you're not really buying a fourplex like the 40-year-old fourplex that's down the street. You're buying 4 units in a 100-unit brand new apartment complex.
Yeah.
And yet you're not at the mercy of apartment or commercial financing for the reasons that Steve talked about. So that's just kind of a really unique set of facts that works really well. Plus, anytime you buy resale real estate, whether it's 5 years old or 40 years old or 100 years old, there are problems like you're talking about that you just can't see. With a brand new property and a 1-year builder's warranty, you've got a lot of life left in that asset.
Yeah, and the property management component, they got to live with that. That's huge too. Whenever we see a turnkey provider, even just on a rehab type property, the ones that I like are the ones that actually are going to tenant and manage the properties that they've built, right? They got to stand behind kind of their work. And so, I like that when I see people that are active in a market, and these guys are active in multiple markets, so they do have the compared to what. They're not just out there going, oh, do this market because it's my one and only offering, but you have choices within a group that has different opportunities for you and some of these other nuances that we talked about that I think are really important. One thing that Steve mentioned there at the tail end that I think is something not to be overlooked is this concept of, in equity happens, we call forced equity. He called it forced appreciation. And that is, when you're buying in a market, any market, and again, we're talking macro market, where there's been a degree of recovery, where certain markets have kind of picked up a little bit, and you can say, okay, there's some momentum here. That's great. But the price is reflecting that momentum. You have to really sharpen your pencil to make sure that you're buying something that makes sense. When you have the opportunity to get in at the dirt level and then ride it all the way through, that's like a value add without maybe the unknowns and some of the surprises, and you have the opportunity to have a little bit more control over that financial outcome. And who cares how long it takes? Because if you lock the whole thing up, at whatever point in time, then if equity is happening in that marketplace, it's happening to you, whether or not you've actually closed.
Well, and the other part of we talk about a lot of the equities, forcing equity, but this is also phased equity in that regard, because your contract price is set and the market's going to do what the market does. And as rents go up, as the properties are worth more, it may be that your philosophy is to hang on for 10, 20, 30, 50 years. But as Steve mentioned, there are people that decide, hey, it's time to get out. That can create opportunity. And that's just one more nuance when you've got these different markets. So what Steve and his team have done is put together a couple different market studies on the markets that we talked about. Not yet with the Boise market, but I'm sure if you get on the list, they'll make that available to you. And that'll also give you all the details so you can contact them and find out what do these things cost, what does it take to get in line, what's the deposit. Plus, definitely look at the units, because I remember the first time I was thinking fourplexes, I had something in my mind. Right. That's not what these guys are building. It's beautifully beautiful stuff. Here's what you do. Send an email to Fig Markets, F-I-G Markets, Fig Markets at realestateguysradio.com, and they'll send you out these couple reports, and then you can stay on that list, so as they have more markets, you can learn about them. Fig Markets at realestateguysradio.com. Hey, big thanks to Steve Olson for not only sharing some great markets with us today, but also this unique opportunity that they have. Very excited about that. And next week, we'll take another market spotlight and look at another part of the United States, maybe worth your consideration. Until next week, go out and force some equity to happen.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers. Low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct. Asset protection strategies for real estate investors. From attorney and Rich Dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys Radio Show.